Howdy, everyone. Christine here with the TBC. And today I have the privilege of sitting down with Morgen Rochard, and we're going to be talking about financial planning from a Bitcoiner's perspective.
Christine, thanks for having me on.
Oh, Morgen, thank you so much for joining us today. I have been really looking forward to this conversation because my background is also in financial advising, just with the RIA firm where I work. And so I'm kind of new in the space and so intrigued by your story of starting up an RIA firm. And also, just as I follow you and your content, I've just always been so impressed by the organic perspective with which you approach things. So people will see on your Twitter, right? You're not even just looking at Bitcoin or finances in general, but life and relationships and spiritual connections. And so really looking forward to introducing our audience to you, for those who don't know you yet. And also just a disclaimer for all listening, today's information is for education purposes only and not considered financial advice. So with that,
thank you for
Morgen,
that disclaimer.
You probably have to talk about that a lot.
Yeah, for sure.
So start us off. Tell us a little bit about you and who you are and your firm, Origin Wealth Advisors, correct?
Yep, that's right. So my firm is almost 9 years old now. It's hard to believe, time flies.
Wow.
Prior to that, I worked at some of the large wirehouses. I worked at UBS. I also worked at Merrill Lynch. And before that, I actually started my career as an equity options trader. So I have a pretty wide background of different aspects of finance and personal finance and seeing wealth management from one side or the other. I branched out and started my own firm because I liked what I was doing and I just didn't like where I was doing it. And I wanted to have more personal connections with my clients and be able to provide what I felt like was real financial advice. And so that's how Origin was born almost a decade ago now. My firm was just me when it started. And now I have 2 full-time employees who work for me, which is great. We have somewhere around 42 or 43 clients. We mostly deal with a high net worth population. And at this point, we have people who have been in Bitcoin for a while who are coming through who need financial planning advice. They're realizing that, Bitcoin in and of itself is not necessarily a financial plan, and they want some options about how to handle it and what else they should be looking at. And so they've landed here, which has been really nice. So it's been really great for me because it's starting to combine 2 things that I really love. I've been involved in Bitcoin now for the last decade as well. So it's nice that in the last few years or so, I've been able to combine the 2.
When you started out, were you already a Bitcoiner and you were looking for a way to integrate that into the practice?
Yeah, so I came across Bitcoin in 2011. I didn't do anything with it. I saw a Mises article about it. I've always been into Austrian economics, and so I thought, oh, well, this is really cool, but I couldn't figure out how to buy it in a way where I didn't think I wasn't going to be scammed out of my money, basically. So I
Yes.
just forgot about it. And I then met in 2013, I met my now husband, Pierre Rochard, who brought back up Bitcoin on our first date. And I was like, oh, I remember that thing. Um, and it clicked back
I
then.
love it.
At the time, I know. I
Match
was
made in
still
heaven.
working. Yeah, exactly. We were like both really geeky into Austrian economics, and we were talking about Bitcoin on our first date. And so I was working at UBS still at the time. So I would talk to people about Bitcoin while I was at UBS, and they just thought I was like a crazy person. They didn't they didn't take me seriously or anything. And they didn't really care either because it wasn't back then, like 10 years ago, it wasn't what it is today,
Oh, yeah, for
by any
sure.
stretch of the imagination. So it was just like that weird, that girl in that weird cubicle was talking about whatever. And then I left and started my own firm, and I started talking to my compliance consultant about it, and we really just couldn't get a good feel on what was appropriate. So my firm opened doors in 2014. Again, still a very new landscape for what's going on in Bitcoin. And so it just wasn't something. She said that if people ask me about it, I can absolutely talk to them about it, but it's not something where I can solicit actively. We just didn't feel comfortable or confident
Yes.
with that. So I didn't say anything basically about it in 2014 or 2015. In 2016, I actually had two clients ask me about it. And so it was very easy. I was like, oh, great, let's talk about Bitcoin. And so we did. And so that was great and got two clients involved back then in 2016. Had a lot of clients actually ask me about it in 2017 because of the big run up that happened there. And I had already been having conversations about it, and it was still the same rule: was if somebody asks you, you're allowed to talk about it. If they don't ask you about it, don't bring it up. I started to sort of break that rule in 2018 when people started asking me about gold. And so the conversation I had with my compliance consultant at that time was, hey, if people are asking me about gold, can I mention this other thing? And at first she was like, I don't really know. And then we decided on yes, because it wasn't considered a security and still is not considered a security. So basically it wasn't providing investment advice in the traditional sense because the SEC hadn't declared it a security, in which case, if somebody brought up gold, it would be okay to tangentially bring up Bitcoin. And then from there, I think it just like, it's like when you go into the ocean and you dip your toe and you're like, oh, it's very cold, okay. And then,
Then it
like,
warms
all right,
up.
yeah. And then warms up and you get your ankle in, and then you're up to your knees. And the next thing you know, you're just diving under waves and stuff. I feel like that's kind of what happened with my practice was like, okay, I dipped a toe and I dipped my other toe and I just put both feet in. And then next thing you know, like by 2020, we're just advising people on it. And there still really hasn't been any guidance, I would say, from the SEC on what advisors are supposed to do. So from my perspective, no guidance at this point. It's irrelevant. People have questions. They have real life problems that are happening now with Bitcoin,
Yeah.
and it's not something that we can avoid.
Yeah.
And everything in the traditional financial system is pointing more and more towards that this is a solution that clients can use as part of their financial plan. And so I can't wait around basically for the SEC to tell me what I'm supposed to do.
Right.
At this point, my view on it is like we're following the rules. We're an RA. It's been established for a long period of time. We follow all of their rules on everything all the time. And if they want to come and nitpick about what we're doing with Bitcoin, then come and tell me about it, right?
Yes. Yeah,
Yeah.
and it's been so difficult because the Bitcoin community has been asking for a long time, just give us guidance, tell us how to navigate this. And you also bring out a very important point that maybe our listeners aren't so aware of, the differentiation that the SEC is speaking about with Bitcoin because it's decentralized, considering it more like a commodity, and then everything else, which would
Yep.
be more centralized. I don't know if you'd like to speak to that at all, or what you say about cryptocurrency in general versus Bitcoin when you're talking to the people that you're advising.
Yeah, it's made it easier on me, to be honest, because first of all, look, I'm Bitcoin only. I only want my clients to be Bitcoin only. The fact that there is, it's possible that all these other things are unregistered securities makes my job really easy. It's just like, look, Bitcoin's not. All this other stuff is. I don't know what's going to go on there. I can't advise you on that. You shouldn't be messing around in it anyways. And so it gives it an extra, it makes it a lot easier for sure, I would say, in my practice to help people be like, hey, look at Bitcoin only. There's other reasons why I think Bitcoin people should be Bitcoin only, obviously, other than, it's not an unregistered security. But I think from that perspective, it should help at least guide advisors towards, okay, well, this one's allowed. Bitcoin's fine. It's all this other stuff that, the SEC is unsure about right now. And so at the very least, I should learn about Bitcoin, figure out what it is and whether or not it belongs in a client portfolio. And then I'll worry about all this other stuff later. And so from the client perspective too, I mean, we brought that up, but we've also just brought up the fact that like every other coin is basically centralized. I mean, that's why it's even up in the air about whether or not it's security. Right. If it's centralized, then how different is it really from your day-to-day dollar usage? And just comparing like what fiat is versus what some of these other cryptocurrencies are and how Bitcoin is really actually different and why that's a diversifier in your portfolio. So in some ways, like the SEC's kind of helped me with my job. Help me with my job in that regard.
Yeah.
In other ways, obviously, like the lack of clarity does make it such that other advisors are scared to jump into the space and they're not exactly sure what to do, and their compliance departments aren't sure what to do, and it does create this barrier where there are people, plenty of people out there who use financial advisors who have legitimate questions about this asset class, and they can't get straight answers from their advisors. So
Yes.
I would say in that regard, no, they're obviously not helping people by protecting them, quote unquote.
And what is your response when people come to you and they're asking about Bitcoin, or maybe they're asking more generally about gold or sound money? Where do you go from there?
Yeah, so we always talk about what money is. I like to start there because we live in a world where we don't really know what money is anymore.
Mhm.
Most people, when they think of money, think of it as just a medium of exchange. They think of it as like, I get dollars in my bank account and I save some of it in, my emergency savings fund, but the rest of it, because of this inflation thing, I know I have to invest it. So I figured out how to do something with it. And then, money is just like the thing I go to the store and I buy groceries or I buy my coffee or, I buy my kid a gift, right? That's kind of what we think of when we think of money. We don't think of the fact that money is used as a medium of exchange, a unit of account, and also a store of value. Dollars are a terrible store of value. They're a really good short-term store of value. They're a terrible long-term store of value. So from that perspective, it's opening up clients' eyes to the fact that they're using investment accounts basically as savings accounts. They don't really hold money anymore. That we haven't been in a society where we've held money for a very long time now. It's been over 50 years basically since people have really been able to hold money. And the governments really have manipulated currency forever. I mean, you could look at throughout time, right? I mean, the first coin that ever existed was the Lydian coin. We don't use that anymore, and there are reasons why, right? And so I think when you open up people's eyes to the history of money and what money actually is, then it makes it a lot more clear why you would want to own something like Bitcoin. And if people can't get past like their view on what money is, then it's going to be a very difficult case of converting them from owning, everything in fiat to even, doing 1% in Bitcoin. And I've seen that with clients. Some clients, they get it right away and they want to have, somewhere between a 5 and 10% position. It's not a big deal.
Mhm.
Other clients, it takes, several conversations and they're willing to do 1 to 3%. There's some clients where it doesn't matter how many times you tell them what money is. They don't care. They're not going there. And so I think that that's just something that the community in general has to understand is that kind of like the example I was talking about earlier about jumping into the ocean, right?
Mhm.
People don't just dive right in, right? Some
Yep.
people, they need to take their time with these things, and we need to be patient with them. And in the meantime, keep putting out good educational resources. That way, when the time comes, when there's something out there that will click or flick the switch for that specific person, it'll happen.
And speaking of comfort level, with RIAs, there's particular rules about what you can do with the funds that come in. And so, as diehard Bitcoiners, we're always talking about not your keys, not your coins. But there's a lot of people that are not comfortable taking the responsibility of bringing those funds to themselves. What have you found as a custody solution that works with the regulations around RIAs, but also speaks to the special case of Bitcoin, where it is a bearer asset, and you don't just want an ETF that tracks the price of the derivatives, right? You want the actual asset. So, what have the solutions that you found for that custody situation?
Yeah, so we talk to clients a lot about the difference between single sig, which is holding one key that has Bitcoin on it, versus multi sig, where you have multiple keys that can sign for a transaction. I would say majority of clients like multi sig better than single sig
Yeah.
because there's no single point of failure.
Mm-hmm.
For most people, it's terrifying that let's say, I don't know how much Bitcoin people are buying, but if you buy a few Bitcoin on there, and if you think Bitcoin's going to go to $1 trillion a coin, which a lot of people in the Bitcoin world do, then you're holding $3 trillion worth of assets in your house on one little tiny hardware wallet device, right? Obviously, I'm
Mm-hmm.
hyperbolizing here to make a point. But what people like is okay, if I have, a two of three, then if I lose one of those keys, it's not as big of a deal. But once you start adding more keys into the equation, right, you have to keep track of more locations, you have more devices to check on, you have more seeds that you have to keep track of, right? So even though you're removing that single point of failure, you're introducing complexity, which for some people makes it a little bit more difficult. So what we've done for clients is in meetings, I will talk to clients about, the drawbacks of why you might want to do, or the pros and cons of each, basically, of why you would want to have multi-sig or why you would want to have single sig. A lot of our clients actually do a multi-sig through Unchained Capital
Mm-hmm.
is where we do a lot of it, just because Unchained holds the third key. So instead of the client, let's say, having to use Bitcoin Core to set up their own multi-sig solution, which is very hard for the average person to do, they use a service like Unchained Capital. They only have to figure out what to do with 2 out of 3 of the keys, and then Unchained Capital takes care of the last key for them. Clients like that because then they're like, all right, well, if I lose one, Unchained's probably not going to lose my other one, in which case I'll be fine. And so, yeah, so that's definitely something that we have a lot of clients do that they like quite a bit. We've been looking into how to help clients with their third key as well, as an option, but it's not a service that I'm offering yet. So I don't want to, excite people too much with that. And then we do have people who just like single sig. They're like, look, it's easier. I store my one hardware wallet here. I store my seed phrase somewhere else. I sleep soundly knowing that I don't have so much complexity going on. I don't have a third party involved. And that's fine for a lot of people as well. I would say that we do not we go out of our way to make sure that people do not keep coins on exchanges.
Yeah.
And so we just don't have any client, like unless they have, some silly amount that they're trading around in on a Coinbase account or something like that. Like they really aren't holding their keys on exchanges anymore,
Yeah.
at least in my practice. And we do have some legacy GBTC positions, but at this point they're very small relative to the percentage of clients who are doing multi-sig.
That's very interesting. So just to point out to our viewers, the registered investment advisor model is generally that you take a percentage management fee of your assets under management. But what I'm hearing you say is that you educate your clients, but then you give it back to them and put it in their court to hold their Bitcoin. So you're not really getting paid for that at all. You're just advising them that this is an important part of your portfolio, and we actually are not even getting compensated by telling you this and then empowering them to go and do it themselves, whether that be single sig or multi-sig. Am I understanding that correctly?
That would be correct if I charged assets under management. I charge a flat fee based on net worth. So in my
Interesting.
practice, no. I think though that that's where this business is headed. I think that people are going to start leaving the AUM model behind for a number of reasons. We've already started to see a transition of people moving out of AUM and into more flat fee style subscription services or just flat fee in general. And so I think that if it actually it should be a motivator for advisors. If you're going to do this right and you want to provide financial advice and you also want to be paid on these assets for whatever reason,
Yep.
which is fine because you're providing a service on them, then you probably need to change your fee model. If you're going to stay with an AUM style fee model, then you're going to be stuck using a provider where you can actually charge on those assets. That's not in the best interest of the client though, right? So if you're a fiduciary, and you know enough about Bitcoin to know that they should own Bitcoin, then you should also know enough about Bitcoin to know that they shouldn't be keeping it on platforms.
Yeah.
In which case, I'm not to knock, anything that like a company like Swan is doing. I think that they're doing a great job, and they have an advisor product. That's where an advisor would go if they wanted to charge an AUM fee. But at the end of the day, if a client is holding Bitcoin, at Prime Trust, it's not necessarily in the best interest of the client. And the advisor does need to disclose that, right? Hey, I'm charging a fee on this. Hey, your Bitcoin's at risk, obviously, because you're keeping it at a custodian rather than holding it yourself. There's also a risk, though, obviously, that the client loses their money. It's kind of the other thing, right? Yeah. So I think that's something that needs to be discussed as well. There are some people who are just not ready to take custody, in which case a product like Swan would be fantastic for that kind of a person.
Yes.
Until they're ready to actually go take self-custody, at least it's stored somewhere, and where people have eyes on it. But it doesn't necessarily mean that like that Bitcoin couldn't evaporate instantly, like we've seen happen in companies like Celsius and FTX and so forth.
Yes, beautiful. Well, and you're speaking about risk too, and that's something that it's really important. One of the reasons that everybody always emphasizes, we are not giving financial advice. Even if we are a financial advisor, we're not giving you general financial advice because everybody has different risk tolerance and everybody has different needs. They have different timelines that they're trying to meet. But speaking more generally then, so with those caveats that risk level is different, how are you able to say how you do advise someone that's asking themselves, should I put a little bit into Bitcoin? What's a good amount? Obviously, not your whole net worth and not next month's rent money, but what do you generally say on that topic to people?
Yeah, I wish there were a good rule of thumb. Like, I feel like in the standard financial world, right, we talk always about you kind of start with the 60-40 portfolio and then you back away from that. The 60-40 portfolio is 60% stocks, 40% bonds, a moderate allocation. Somebody with a moderate risk tolerance with a reasonably long time horizon can do that, right? And then, from there you can be, okay, well, we'll go 70-30 or we'll go the other way, right? And it's like very kind of cut and dry and easy. Bitcoin's not like that, I would say. So Bitcoin is one of these things where the more you understand the technology and the longer your time horizon, the more you can hold of it. And then it also seems like the more people go down the Bitcoin rabbit hole, the more of it that they want to hold and the less of other assets that they want to hold. And then it's starting to depending on, what client you're talking to, you're starting to hold people back from having these 100% allocations like you were just mentioning. And that's very different than like the person who's just starting out,
Mm-hmm.
who has just had maybe an hour-long conversation with their advisor, learned about Bitcoin, and is like, okay, well, my advisor normally gives me good advice, so I guess I'll just, do 1%. That sounds fine, right? So there's a very large range there, I would say.
Yeah.
So the thing that I often like to talk about is there's a risk that you need to balance. So there's a risk of not owning any Bitcoin, I think.
Mm-hmm.
There's a risk of potentially owning too much Bitcoin, and Bitcoin takes a lot longer to pan out than people think it will for whatever reason, right?
Yeah.
It's a possibility that not in our lifetimes that Bitcoin is, not a global reserve currency, in which case pretending that the IRS isn't going to exist and that you don't have to worry about all the rules and regulations and other things. You shouldn't own any other standard assets, right? There's a risk that that kind of stuff doesn't happen in your lifetime, in which case, you're holding Bitcoin waiting for this, momentous event that may not happen.
Yes.
So then there's something in the middle, right? Where like, okay, we see what's going on in the banking system. It's not ideal. We see how governments have been very, irresponsible with their use of the money printer. We see inflation. It's a real number that people are just seeing at the grocery store. It's not like this imaginative thing that financial advisors have been talking about for the last 50 years, right?
Yeah.
It's a real thing that people are approaching when they go to the store or when they just are buying things in general right now. And so it's not that Bitcoin's this one-to-one hedge against inflation or anything. It's not that like, as soon as inflation ticks up, that Bitcoin goes up in price, but it does, it is a store of value, and it is something that provides long-term protection of that over a long period of time. And so what needs to be balanced is the risk that the fiat system really does go sideways and that inflation gets out of control, and that you want to hold some sort of long-term savings that won't be affected by this, versus, the fiat system staying the same and managing to, cobble itself together and get back to some sort of semblance of normal. Given what I see going on right now, for most people, that's going to mean at least a 5 to 10% position. It just is like there's no way around that. And then from there, it's just deciding whether or not you want to take it out of your stock bucket or your bond bucket.
Mm-hmm.
And I think that that's going to be really indicative of your risk tolerance, your time horizon, your understanding of the technology, all the other things that go into like how you design an asset allocation.
And from your perspective, would gold be something that Bitcoin would replace, or something that would have its place in a diversified portfolio?
I see it as something that Bitcoin replaces. I know that I'm not alone on that, but also that there are a lot of people who would argue against that as well. So I think that people need to sort of take my opinion about it with a grain of salt. I just think that Bitcoin makes gold obsolete, and it's only a matter of time. Again, it's one of those things, right? Like, I don't know how long that is
Right.
going to be, right? I don't know if that's 100 years, if that's 10 years, if that's 500 years. In my opinion, though, like Bitcoin obsoletes gold in basically every way. It has a cap supply. We don't actually know the supply of gold. It's easily verifiable. Gold is not. It doesn't require any sort of centralized storage, which gold does if you're going to hold it in any meaningful way. It's easy to transport. It's fungible, right? You're not going to go to the store and like start, stripping off pieces of your gold bar, right? There are a lot of reasons
Yep.
why gold is problematic, and why, it was very easy to use it as something to back dollars with, and then also to depeg from, right? I think that people often forget that of, oh, well, if we just go back to a gold standard and everything will be fine. And the point is that it won't, because it's still centralized, and you still have that centralized third party intermediating with your finances, which you just don't have with Bitcoin. And so in my view, yeah, if you want to hold something like gold, then you should really, really be considering Bitcoin, and thinking about whether or not, that's something that's going to happen in your lifetime or not, I guess, is another story. The volatility obviously is something to consider. Gold doesn't have nearly as much as Bitcoin, but if you look at the long run returns, gold has not delivered what Bitcoin has, and it's not a growth currency, and it's not something that hasn't reached mass adoption.
Certainly. What do you say to other advisors who may be interested in Bitcoin, or maybe they're not? They're afraid of it. What do you usually advise to other advisors in your position who are playing with the idea of adding Bitcoin to what they offer?
Yeah, so I think it goes back to that what is money conversation that we have with clients. Advisors also need to understand what money is. And most advisors don't, and it's not their fault. And I think we're often given a bad rap because, oh, advisors, they can't seem to get their head around this Bitcoin thing. We're taught, Keynesian economics. Austrian economics is never brought up, right? People don't
Hmm.
talk about even unit of account, right? We were talking about this earlier, right? Unit of account, when actually explained properly, would make people's minds explode about what's going on in the current environment. The example I like to use about unit of account is imagine that you have a ruler and you're building a house, and that there was some sort of Federal Reserve Board of Rulers, and they decided that rulers now had 13 inches instead of 12, and you're in the middle of building your house. You're like, what? I just ordered all this stuff for 12 inches. Now I have to go use this 13-inch ruler. And you're trying to figure out, you're converting and doing all this math, right? And then, 3 years later, they're like, oh, 13 was too much. We need to contract down to 10 to get back to that 12 number. You know, it's like, it's preposterous, right? You think about it and you're like, that doesn't make any sense. Nobody would ever do anything like that. And thank God there's no, Federal Reserve Board of Rulers, because they probably would do something like that. But that is what they're doing. That's what they're doing with our money. They're like, oh, well, inflation should be 2 or 3%. So we'll just like print a little bit more and nobody
Right.
will notice, right? And then the
Manipulate it
next
till we
thing,
get to where we want it.
yeah, and then we'll contract down and then we'll bring it back up. Like it's like, and then I think the other thing that people don't recognize about it is like they're human like we are.
Yeah.
Right? They make mistakes. They go to a grocery store like we do and they forget their list and they don't buy the right things, right? And their kids are screaming and their grandkids are screaming. It's like they're living a normal life. They don't have some sort of clairvoyant knowledge. They're not God. They don't know what the right rate is supposed to be at any given period of time. And same thing with people in government. They don't know what the right policy is supposed to be at any given period of time, right? We use the information as humans, what we have at the time that we have it, and we try to make the best decision that we can, and we're flawed, and that's the way that we are. So to
Hmm.
then try to make everything right and try to play God in a way where we're going to fix everything on behalf of people, it's just not going to work. And so the only way to remove that is to have something like Bitcoin where the code completely removes human beings from the monetary policy.
That's right.
And then human beings can make decisions based on what the code says it's going to do.
Yep.
That's what's so brilliant about it. It's not even necessarily what's in the code. I mean, well, yeah, there's a lot of really great things about the code. So I don't want anyone to misquote me on that and say that I'm some sort of, crazy person about about the code. But like it didn't matter if they picked 21 million or 35 million or 100 million Bitcoin, right?
Yep.
The fact is that it's a set supply. The fact is that, that every 10 minutes a new block comes out, that all of this stuff is known and that people can rely upon it and then make their own decisions, flawed or not, about how they're going to interact with their money based on that. And so what I would say to advisors is that they need to learn that to begin with. And once they learn that, then they say, oh, that's why this is a diversifier in clients' portfolios. And then from there, you can decide, okay, given my practice, how am I going to implement this such that clients get access to this in a way where I feel I'm being fairly compensated for the advice I'm giving them?
Hmm.
They are properly holding the asset. They also understand what the asset is, and so forth, right? And just going down the list. But you can't make those decisions without actually knowing what Bitcoin is.
Do you provide much education for advisors, or is that a realm that you would like to move into? Sounds like I know that there's a great need for that.
I have tried. I worked with CoinDesk in, I guess it was 2020 and 2021. They had a Bitcoin for Advisors event that they were running. They ended up not running it in 2022 and decided to do like something for advisors during consensus instead. And I think that that's actually what they're doing again this year. Rick Edelman has his Digital Advisors Council. I'm sorry, it's a long acronym. I always draw a blank on the rest of it. But you can look up his thing as well. But it's not Bitcoin only, and it's not just Bitcoin content. And so it's been a little difficult, I would say, to get the word out to advisors about like why just start with Bitcoin, just start and learn what Bitcoin is. And then if you still feel inclined to learn about all this other stuff, then great. But at least start with the main one, learn
Hmm.
everything that you can about it, and then make a decision about whether or not this other stuff is something that you even need to be talking to clients about. Because usually what happens is that clients are asking about Bitcoin or Ethereum. Let's be honest.
Yeah.
They're not asking about, I mean, maybe they brought up NFTs when they were popular in 2021. And, if you knew enough about Bitcoin, then you would know, okay, this is why you wouldn't want to get involved in an NFT. But again, it's like
Yeah.
if you just come back to the basics every single time,
Yeah.
then you'll be able to properly advise clients when they have all these other questions. But there's just a barrier there. And I think also because there's not that much money to be made off of Bitcoin education. Like, let's just be honest. Most of us in the space are just doing it out of the goodness of our heart because we love Bitcoin so much.
Yeah.
That's really how like the word has gotten out about Bitcoin is people love Bitcoin and they don't want to stop talking about it.
Yeah.
Um,
And
and, and it works, right?
yeah. And it changes
Yeah.
the way you do advising because when it's like, okay, yeah, I could do it this way and I could make money on this, but that's not, I'm a fiduciary and I care about you and your future and your wealth, and you have a right to understand this. And even the whole thing about Bitcoin, it's trustless and as you say, like it's written into the code. And so you're able to really empower people to go and continue on their way without needing you. And that's the beauty of going down the Bitcoin rabbit hole is the more that you're down there, it's just so beautiful, the whole decentralized, trustless system that in the end ends up empowering everyone. So I don't know if that's been your experience, but
No, definitely. And I think though it makes it difficult though, right? Because Bitcoin in a way, like the advertising and marketing for Bitcoin are people like you and me and the army of people on Twitter who are constantly talking about Bitcoin and the people who go on podcasts like this and other podcasts where they're talking about Bitcoin and they're just excited and they want to share good information about it, but they're not necessarily getting paid to do that.
right.
Whereas like these other coins, right? They do ICOs, they convince people to buy these ICOs, God knows how, and then they use that as their marketing budget and they're able to go to advisors like you and me and say, hey, look at what our cool coin is going to do for your clients.
Yeah.
And for the most part, if advisors don't understand what Bitcoin is,
Yeah.
then they won't realize that none of these other things that are being presented to them will actually solve any problems that any of their clients have. So again, it always comes back to that initial education about Bitcoin, which I think is just fundamentally lacking. And if advisors aren't going out of their way to actually get that information, then they're just going to be lured by some of the other promises that these coins have.
Yes. Well, and you were telling me earlier that you're writing a book. So hopefully that will be a help to the community once you get that finished.
Yeah, so I'm currently writing a book called the Bitcoin Personal Finance Book.
Oh, I love it.
If you'd like to hear information about when it's coming out, I have a website. It's just bitcoinpersonalfinancebook.com. And we're just collecting email addresses. There's nothing really on the website other than that. And at some point when the book comes out, I will just send an email to everyone on that list saying, hey, the book's out. But yeah, the idea behind the book is that there's tons of personal finance there's just tons of resources out there for people who are looking to change their personal finances. There's tons of Bitcoin books out there, people who want to learn about Bitcoin, which is great. There's no one resource now out there where you can combine Bitcoin, which is money, with personal finance. And so my hope was that to combine the two and integrate the topics so that people can get really clear information on how to operate in a household that owns Bitcoin, really in any capacity, whether it's, a 1% holding or 100% holding, right? Where you understand how this interacts with the rest of your personal finance situation.
I assume one of the things that you'll probably cover in that would be retirement. Is that a topic
absolutely.
that, because that's often why people come to advisors is, oh my goodness, I have this timeline, it's coming up on me quickly, and how do I get there? What would you say on the topic of retirement and how you factor in Bitcoin into all of that?
That's a great question. So retirement, I think, is one of a perfect place if you if you want to own Bitcoin. So retirement, people often think of, oh, well, I'm slowing down in retirement, and so my time horizon's smaller. In which case, I should own just a bunch of bonds and get some income off of it. Retirement periods are getting longer and longer for people. People are also working longer and longer, but we're living longer and longer. Some people are also retiring relatively early, like I would say early relative to, let's say, the Social Security age, which is now rapidly approaching 68. So for a lot of people, right, if you're most people don't make it to 68 when they're working. Most people are retiring sometime in their 60s, and most people are living, well into their 80s, sometimes in their 90s and beyond. And so if you retire at 60 and you have, you're going to live to 100, let's call it, you've got a 40-year period, a 40-year time horizon, in which case holding a bunch of bonds and getting income off of them isn't going to do very much for you over the next 40 years of that retirement period. So I think it fits in really nice. And we were talking about that 60-40 style allocation, right? It's like not 60% Bitcoin or anything, but that you would have an appropriate risk allocation to something like Bitcoin in retirement so that you outpace inflation and so that you're actually able to meet the expenses that you're going to have. For retirees, what they've noticed is that around the age of 78, all of their regular expenses start to go down. But you have an increase in medical expenses, but you have an increase expenses gets offset by like the decrease in the other, just from slowing down in life, not taking so many vacations, not going out to dinner as often, right? All of those things, they compound, and you have a smaller expense pile that happens. But then if on the other side of that, all of your medical care increases, right? Then you have to be able to prepare for that. Medicine has had the highest inflation rate of any category thus far. I don't know what it is off the top of my head right now, but it had typically been tracking somewhere between 6 and 8% before we even hit 6 to 8% inflation, as CPI was saying. So that means that you want to own something, especially own something like Bitcoin through retirement. That way, should you have these kinds of medical expenses or other things come up, hopefully we all hope that everybody, lives a very nice long retirement and they never get sick and then they die in their sleep, right? Like that's best case scenario and you don't need that money. For the reality is that most people that's just simply not what occurs, in which case having something like Bitcoin will help you plan for that.
Well, and what you point out too is really pressing right now with the fact that inflation is going up quite a bit. So even with the old traditional 60-40 portfolio and you've got your bonds and they're paying out interest rates, but the interest rates for so long have been point nothing. And then now with everything going up much quicker than before, I'm sure there's a renewed interest and concern with it. And probably you're having even more and more conversations about this with people because they're finding that what they've put aside, which at one time would have comfortably covered their retirement, now they're looking at it and saying, oh my goodness, how are we going to meet the needs in this new situation of inflation?
Yeah, the one thing that I wish I had really taken notice of at the time when it was happening was there was asset inflation going on prior to there being consumer price inflation. And we noticed it in our practice because all of a sudden the numbers for clients started to get really nice. We would run retirement numbers, and every time we ran them, we were like, why are these working out so well? And you're thinking like, oh, this person, we thought they were going to, have to work till 70. And now it says that they're retiring at 62, stuff like that, where you're like, what? And over and over and over again with every single client. And you would think like, I wish that my brain had worked a little bit better at that moment to be like, no, consumer price inflation is coming. But it wasn't obvious for whatever reason. I thought like, okay, maybe we really are just doing good work. My clients are saving more than usual. Like we did the math on it. They're saving the appropriate amount. Like maybe we're just doing it right, and no, what really what happened was like there was money printing and there was asset price inflation and then the consumer price inflation followed. And so now we're, now that we have that consumer price inflation, right, obviously the plans are starting to look like what they were supposed to look like from the beginning. And you're sort of backtailing on what you tell clients about how rosy the picture was. It's not as rosy now, and et cetera. And I think that there's more of that to come, unfortunately. It seems like inflation has backed down a little bit, but just given the fact that, SVB, I think, is a perfect example of this. SVB, they basically took consumer deposits and they bought long-term mortgages, right? They didn't make crazy loans for the most part. I mean, they did some of that, but yeah, they bought treasury bills and mortgages, and they were managing their duration by holding mortgages. Because mortgages get paid monthly, whereas treasuries don't. They, depending on the coupon, you could be paid just once or you could be paid twice a year. And so it's just, you think about that and you're like, all right, well, they weren't even doing anything that crazy. And then they go under, and instead of the government, not doing anything, right, they'd step in, obviously, because they don't want there to be a crisis, in which case they're printing dollars to bail this situation out, but the situation was specifically caused by them raising interest rates. So like it just seems so clear to me that if we're just going to keep doing this game where we raise interest rates because there's inflation, and then we bail banks out because we caused there to be a run basically on the bank, and we caused all of their assets to go underwater, right? Like, and we're just going to keep doing this, then yeah, there's going to be a lot more inflation coming down the pipeline, in which case, I mean, how could you not want to hold something else just in case, right? Like my best hope is that I'm wrong and that people aren't going to suffer like severe consequences from what's going on in government. But there's an option right now that people can take that's out there, and it's Bitcoin, right? And so we've just been trying to educate clients as much as possible about that, of like, hey, like we hope that the scenario doesn't happen, but yeah, things are kind of on fire right now. And it doesn't necessarily mean that like Bitcoin's going to be worth a lot in 2 minutes from now or 10 years from now, but it is something that you're going to want just in case. And so that's kind of how we've been approaching it with clients, especially the ones who have been a lot more reserved about not really wanting to get involved. It's just like they're an insurance policy, an opt-out, right? Of just something just in case.
Has there been more receptivity these days? As people are seeing that the world is changing and the solutions that worked in the past are not working anymore.
Yeah, I think so. I mean, I have a client in particular who she said one of the things that she didn't like about Bitcoin was that it was like when you own Bitcoin, you're rooting for the world to fail. And so what she's come around to is that no, like this is what's going on.
Yeah.
And there's a solution for that. And so, yeah, she doesn't want to stick her whole life savings in it. And that makes 100% sense, right? Not everyone's going to take everything they own and put it in Bitcoin. And most people shouldn't do that anyways.
Right.
That's not what I'm saying here at all. But that you have this option at least that's there for you should you need it, because things are burning really. And my hope, right, is that we get some good firefighters and we put the flames out, right? And yes. We all go on our merry way, and then Bitcoin maybe it'll be around and it'll take its time and it'll become what it's supposed to be over a period of time. It won't be this like sudden event that shocks many people and really does change a lot of lives.
Well, and that's what diversification is all about, right? So nobody sees the future, nobody knows the timeline, but it's, as you said, it's more risky to own none than to have the different contingency plans for everything, including the world falling apart. Like we can hope and pray and work that it doesn't, that it all works out. But what if it doesn't? And so people do need to be thinking about that. And I think that more and more they are. I've had conversations with my family many times before and no receptivity, and now all of a sudden they're bringing up topics that I'm like, didn't I send you texts about that many times? But I do think that people are getting a rude awakening just with the fragility of what's going on in the monetary system right now.
Yeah, sometimes those closest to you have the hardest time listening.
Yeah, right.
You can ask my kids about that half the time. They don't listen to anything I say. So.
Before we go, I would like to touch on the idea of estate planning, because I think that's also something that probably people are wondering about, right? Because we've all heard the stories of losing your computer and losing your password and your private keys and Bitcoin being gone forever. What do you do to help your clients prepare for estate planning issues?
Yeah, so this is a fantastic question. It really does depend on your state. So there are some states like the great state of Texas where they have a very private probate process, in which case just owning Bitcoin outright, making sure that your family who you're going to pass that Bitcoin to knows where it is, right? And this is problematic sometimes with Bitcoiners because they're like, well, I'm afraid that if I tell my wife where the private keys are, she's just going to take them and go somewhere with it. And it's like, okay, well, maybe you have other issues that you need to work out. This is not an estate planning problem, Assuming you're in a good relationship with somebody and you want to leave them the money, right? And you're not worried about them stealing it, they should know where the key is. If you're worried about this sort of situation of, wife or kids, up and taking my Bitcoin type of a thing, then multi-sig is like the best place to go, right? Because what you can do, right, is you go to a place like Unchained Capital, you hold one key, Unchained holds one key, you give one key to your son who you think is going to steal everything from you, but he only has one key. It's great. And then when something happens to you, your son will go with your will and he'll present it to Unchained Capital and they'll all sign and he'll be able to move the Bitcoin the way it's supposed to go. So at some point you have to have a little bit of trust in the process after you've died that like the Bitcoin is going to move in accordance to how you said it was going to move. But the reason why I brought up the state thing is because Texas is actually the only state that I know of right now that has a very private probate process. Granted, I haven't looked into all 50 states. I've only looked into states where we have clients. And so the other thing to consider is that you might want to have a revocable living trust set up for your Bitcoin. If you're a private Bitcoiner, and you don't want people to know how much Bitcoin you own, what potentially what address it's stored at, we have kind of yet to see what states are going, what like information basically states are going to produce upon people's deaths. There aren't that many cases basically yet of Bitcoin passing where they've exposed addresses or exposed exact amounts. But according to the laws of probate, depending on the state, if they don't have a private probate process, they can both say, Jim Smith owns 6.5 Bitcoin at such and such address, right? And creditors are allowed to come, and it's for the point of of any creditors that might have some sort of claim against the estate. But what that does is it literally exposes exactly how much Bitcoin you own, where it's stored on the public ledger. It doesn't obviously expose where the private keys are stored. But then the onus is then on your family to go and move that Bitcoin somewhere else where it'd be more private. So in states like that, we've been suggesting to clients that they might want to set up a revocable living trust just to store their Bitcoin in to make sure that their privacy is not exposed. And so, yeah, I would say people should start there. And then, yeah, the last thing I would add is that you need to have a plan in place prior to something bad happening to you. So, I think because the Bitcoin world is relatively new and young, Bitcoiners are, they're like in their 30s and 40s, sometimes in their 50s, and they're like, not really thinking about, the fact I'm going to die or whatever.
Right.
Or have feel invincible, have some sort of health event. They're not worried about any of this stuff. But it's a lot easier to take care of this stuff now when you are with it and you can explain it well and you can talk to your spouse about it and other family members if you're going to pass it, or if you have adult children. Having these conversations while you're alive, well, kicking, doing all the good things that you want to be doing in your life is a much better way to approach estate planning, even though people hate doing it that way, than it is to be, mildly incapacitated, right? Yeah. Or on your, sick at a hospital. That's like worst case scenarios, right? You're sick in a hospital and now you're trying to explain to your wife or whoever else is part of your estate plan where you stored that Bitcoin, what they're supposed to do with it. Maybe they have no idea what it even is, right? Yeah. Taking care of all of this stuff while you are alive and well is a lot easier than when you're not. And I've had people approach me with examples of this where they were suddenly ill, right, in their 40s or something like that. And then they had to go through this with their spouse. And it's very difficult to be doing that when you're trying to take care of yourself and fight for your life, when you also need to worry about all your finances. I think that that's something that we kind of take for granted in the traditional financial services arena. There are avenues for this stuff. It's not the same as with Bitcoin, right? If you don't tell somebody where you've stored this, it's gone forever, whether it's in your estate plan or not. So that's just something else to consider. And another reason why we do like multi-sig a lot.
Beautiful. As you're speaking about it, it also applies in part to maybe corporations or businesses that might want to put Bitcoin on the balance sheet. Because similar situation, right, with the multi-sig and the way that you could hold it together. Are you seeing much of that yet, or is that still in the future where companies coming and saying, "Can you help me? We want to hold Bitcoin on the balance sheet, and how do we do it in such a way that protects against some of those things that you're talking about, the son that might run away with it?" That kind of idea.
Yeah, it's still early days for sure, but it's starting to happen. Absolutely. And so I know for sure Unchained Capital has a product for businesses that does exactly that. So yeah, so Unchained Capital has a product. I know that businesses do use it. We've had some clients with businesses who have asked about it for sure. These are people who are hardcore Bitcoiners, though. This is not like the average business. So in my mind, it's still very early days. But also, I think another reason why you might want to own something like Bitcoin, right, is that if it's very, very early days for companies to be holding something like this on your balance sheet, and companies generally do want to have some form of long-term savings, and there's a limited supply, right, then it just points to an investment, just an investment case for why you would want to own Bitcoin, right? Is that there are going to be companies who are going to slowly start coming in, and then more and more companies are going to start coming in and wanting to own something like this. And especially in an inflationary environment where they might want to have some sort of long-term savings that was protected for long-term projects that they might see coming down the pipeline. And so, yeah, I think that there are going to be more ways for people to do multi-sig.
Mm-hmm.
Um, absolutely. And that, depending on how many officers you have, you might do some of these crazy setups where you just have, 5 or 20 or
Yeah.
30 keys, and maybe only, 6 of them have to sign for something. But
Yeah.
so I think that's yet to be seen, like how that sort of thing is going to be worked out. But it's kind of nice because it's a little different than how it is now, where you have to sort of move fiat paper in a way through the system and have different people sign off on things before a transaction goes out. It's very similar, but you'll just be using a hardware device instead of, some sort of other form of signature.
Well, we really are in early days. And that's why just kudos to you for pioneering in the fiat system, really in the advisor system, a way to move forward with the structures that we have, but incorporating Bitcoin into the worldview, into the portfolio. And I'm so grateful for the education that you do, that your husband does. And so just want to encourage our listeners, if they have questions for you, whether they be advisors that like to follow your lead and do this themselves, or people that are maybe looking for advice from that perspective, how would they best find you and hear more from you?
Yeah, thank you. The best place to find me is on Twitter. I'm at Morgen with an E, Rochard, and my firm's website is originwa.com. I mentioned the book I'm writing. Please go to bitcoinpersonalfinancebook.com, put your email in. I will let you know when that comes out. I also have a consulting practice. It's called Money Owners. If you just have questions about your Bitcoin and you want me to answer them, I do that for $400 an hour. You can go to moneyowners.com and schedule there. And yeah, I hope people reach out. I'm happy to answer any questions I can and see how I can best help.
Beautiful. Well, Morgan, thank you so much for taking the time with me today.
Thank you,
And
Christine.
I feel like I could go on forever, so I might have to have you back again soon to continue the conversation.
That would be great. Thank you so much.
Absolutely. And to all our listeners out there, if you enjoyed this content, please like, subscribe, and follow us to be informed when we have new content coming out.
Hey, it's Amy. Click over here to subscribe, click over here for more content, and we'll see you next time.